Welcome to Power Charting. I am your host, Bruce Fraser. Stocks at the Crossroad. This is a very interesting session. I think you're going to really enjoy it. It's all about Wyckoff, all things Wyckoff. And for that, we need Johni Scan, John Colucci. Welcome, John.
Great to be in the house, Professor. Looking forward to the show.
Oh my gosh, yeah, this is going to be a good one. So let's start by talking about something coming up that's going to be very interesting, a lot of fun. You should attend this. This is the TSAA-SF annual fall conference, Technical Securities Analysts Association of San Francisco. We are an affiliated society, and we have a great show this year. Look at this wonderful lineup. John, we have John Colucci, we have John Bollinger, and we have John Kolovos, David Lundgren, Craig Johnson, Jeff Kennedy talking about Elliott Wave, and Steve Straza. And this is just an incredible lineup. Now that I've checked this off, I got to be fair to everybody. This is going to be a great conference because we're going to get a real glimpse at the institutional nature of investing with such great people that work in the institutional environment. As you know, I think what the institutions, the large money interests, the composite operator is doing is so essential to the direction of the market. This is going to be a hybrid conference. There's going to be two formats. It's a virtual conference that you can attend online on September 17th live or watch the recording later, or you can attend live at Golden Gate University in San Francisco. If you have plans to be in or near San Francisco on September 17th, this could be just a phenomenal live event to attend. Network with other people in the TSAA. I will be there. John will not, and I'm mad at him for not attending. I'm not John, but it's just going to be really a great time. So please consider attending in one of the two formats. This is very important. If you are a member of the TSAA-SF, this affiliated society to the IFTA, International Federation Technical Analysts, you can attend as part of your membership. There's no additional charge to attend the conference. Membership in the TSAA is a bargain. It's not expensive. We have great sponsors this year: StockCharts, Wyckoff Analytics, the Chart Report, and All-Star Charts. So we hope to see you there. We hope to see you online. Consider attending on this incredible event, tsaasf.org. Okay, now, John, we are going to talk about all things accumulation type structure, and you have an incredible scan for us today. And this scan really focuses on this area here. We talk about Wyckoff being contextual in its orientation, and we're going to see here in a minute where the stock market is at this time and how there are many stocks that are lining up to be in this potential place. John, what are your thoughts?
Absolutely. We are going to take a quick look at scanning in the context of the current marketplace. We're going to do a very, very simple scan that uses a couple wave actions and outperformance and relative strength. So going to dial us right into what could be sign of strength backing up area. Very, very interesting area to put a trade on.
We'll come back to this schematic in a minute, but we want to consider these stocks based on the context of where the market is at a point in time. So let's talk about where the market is. This chart is through yesterday. Always keeping in mind that we have the Jackson Hole Conference today, Thursday, and tomorrow, Friday. That could be a market moving event. We want to keep that in mind. But here is what's happened. If you've been tuning into our programs, You have been with us every step of the way through this accumulation process. Wyckoff has done a stellar job of putting us in the right path for the market from May to July and this really good uptrend, best uptrend of the year. So starting with the current position of the market, in Wyckoff market discussion that we did last week for our Wyckoff subscribers, is we pointed out that there were 3 forms of resistance up here. And so and I'll come back to this caused form here in a second, but the rally up into the downsloping trend line, this is the overbought, overhanging supply line, parallel oversold line below, and we can see 3 forms of resistance up here. We see the overhanging supply line, the 200-day moving average, and this gray line here is this September-October low, a very important low on the charts that provided support until it didn't, and down it went. And so, John, what we're seeing here is we're seeing a market that became overbought, hit resistance, went into its point and figure targets, and then reacted. What are your thoughts about this reaction?
Well, this is a very, very interesting point to look for opportunity. Of course, this is the crossroads. This is the knife edge. We don't know what's going to happen next, but in a Wyckofian context, we're having an orderly pullback to a prior area of significance. The line is drawn on the chart here, and we're seeing declining volume, shrinking bars, all things that are indicative of stop and turn back up. That is a potential. Could go down too, but potential is that we go up to higher counts, which are shown here with the green numbers on the SPY chart. Your thoughts, Professor?
Well, we had a climactic surge up into this area of multiple resistance in combination with a point and figure count, which is the yellow shaded area, and we will show you the point and figure in a second. But the reaction that occurred off of this reminds us a little bit of the reaction that occurred in March, April, which resulted in the next important big leg down in the bear move. So we must be super cognizant of this. We have talked about swing trading opportunities that showed up in this area from May over to July in many stocks, and we're going to talk more about that in a minute. Many of these counts have been fulfilled. So we are now faced with a fulfilled point and figure count with a climax occurring, which is exhaustion of the uptrend. Now, we're going to talk about the possibilities for how this market could react from here, whether it stops at the origin of the beginning of this climax move and goes into a trading range, or whether it goes into a last point of support type event, or the third option would be just a outright failure and new lows in the bear market. So we will talk more about that as we go. And so here is the SPY. That last chart was the SPY ETF. Here is the point and figure counts that we just looked at. This is a swing trading count, 1 box reversal, and it's 4-point scale, which is traditional scaling. And this is how the count was derived here for the first segment. And then the second segment, which is the green box, gives us counts that go very, very close to the all-time highs set in December, January. And so that would be very interesting, but it could be a long time under the most bullish conditions for this area to then set up for another move up, if that's possible at all. And so the segment B count objective approaches, but is not fulfilled. It has not gone above the first count area. The possible bullish scenarios are an extended backup, which would be something akin to what we just drew here, a deeper LPS reaction, which would be the deeper correction downward like this, and then building a bigger cause potentially. And then the third scenario, we just really have the third scenario being the potential for an outright failure of this market and a new downtrend. So we have to keep all those in mind. We are trading in the context of lower highs and lower lows and bear market conditions. And so that's the reason everybody's so concerned about Jackson Hole, because they're concerned that Jay Powell's going to come out, Fed chief, and say super negative things about interest rates, and it'll put a dour mood over the market after his comments tomorrow. We don't know what he's going to say, and he may say something that's optimistic. But again, we are in the context of these declining moves. But John, I want to show you this before we go to your scans. This is a upward channel that we have talked about in the past on this program. And we had an overbought condition in December, which went above the monthly Keltner channel and above the channel that we drew using Wyckoff technique here, and then a parallel on the low here. And it's been an absolutely beautiful uptrend since 2011. And look what we've done here is we've come down, and let me blow this up. We have come down right to the bottom of the oversold condition. So arguably, John, you could say that this is a continuing uptrend in the long-term bull market. What do you think of that?
Absolutely possible. It's respecting the line, and that's really the key. Is it's respecting the line. It touched it, bounced back.
Yeah.
So,
and here it respected the line, went slightly through it as it did here, and then it rallied up to the midpoint and into the end of 2018, where it had a more important correction. Now, I guess that's 2019, 2020 COVID low. This is the 2018 low. But in each case, it went down and then came back here into the middle of the channel. Here it went right to the top. So this is just an interesting place in this chart. And then here, let's talk about crude oil. And crude oil is just in an interesting spot. It's at the crossroads. John, what do you see here?
well, certainly for the past almost quarter, oil has moved largely opposite the indexes. The indexes have gained strength over the past 35 days, but we're still in a down channel with WTI. So different look there. Weakness across the board for everything over the past 2 quarters, but oil is moving down nonetheless. Some recent strength, but still on the way down. Your thoughts, Professor?
Well, we have looked at this chart in the past, as many of you will recall, and we had this buying climax surge out of the uptrend channel right into our point figure count objectives, which we counted these in the high 30s, low 40s accumulation structure. I don't have that chart up today, but you've all seen this before, counted 92 to 112. Well, look, the buying climax went through it for like 3 days and then failed immediately back into the channel structure and also into the count area, which is right here. And this yellow shaded box represents the top and the bottom of our long-term point figure count objectives. And note how the crude oil has just really stayed within this count zone, except for a very brief attempt to go into an upthrusting action here and then outright failure out of this zone. So the big question in my mind is this reaccumulation. And what will be really important to watch, and the reason I call this the crossroads, is that we have a touch of the bottom of the channel, which was formed off this August year ago low, touch of that, and now crude oil is trying to rally again. So if crude oil can start to work its way back up into the channel, into the top of it, we're going to want to keep a really close eye on that. It's my hope that doesn't happen. CPI will definitely be hurt by that. You want to tame CPI, get oil down, and so get it below this channel line. But nobody asks me what I think the markets ought to do, but this is a really critical place right here. Okay, so now, John, we have two really brief case studies on swing trading. And what I wanted to do was show you this chart of Apple and this beautiful accumulation structure back to May, and then look at what Apple did. And we have been talking a lot about swing trading. Let's put up the point figure chart. And this is this area right in here. And I've counted that for us. And you can see 21 columns across, one box reversal, 2-point scale, gives us a count up to 172 to 184. And this count area has been fulfilled. But what I want to point out, John, is that after this nice little pullback, that we built a beautiful count and we fulfilled that count as a trading opportunity. And what are your thoughts on Apple?
Well, very, very interesting uptrend. Compare and contrast the look of that chart with WTI that we just looked at, completely opposite, moving up into a strong point. Now we're at historical highs, recent highs here, and that is going to present to us the crossroads question. Is this a buying climax? Is it just a rest before it breaks to new highs and maybe fulfills the upper range of the count? We don't know yet, but very interesting possibilities here.
Let's move on because Johni Scan directly speaks to this. Repligen, which is actually in Johni Scan. Here we are looking at a point figure chart that goes back to April. Look at this beautiful accumulation structure. It's quite large for a swing trading count. And we look for causes. We're looking for stocks that have important causes for important moves. And so this count line starts at 162. Repligen just touched 260. What a great move in this stock. And so we have 35 columns, one box reversal swing trading method, 2-point scaling, 70 points a count. We count it from the low and the pivot point, 162, and it takes us up to 208 to 232. Slightly took out that count area and then failed back into this count zone. Does this mean the move is over? Absolutely not. It may build another count for another move. But here, so John, your thoughts on Repligen? We're going to see that in a minute in your scan.
Absolutely. That particular stock satisfied the scan criteria that we're going to cover in a minute. It presents a very, very interesting bar chart as well as the point figure. So we'll take a look at that in more depth, but very interesting. I think there's opportunity there.
Now, all we counted here, John, was this area in the light blue, and there is a bigger count out there. So that could be very well the reason that we have the potential for much higher prices in the future for Repligen. And so there is a big structure. And then look at what the relative strength has done. Is there a relative strength component in your scan?
There is, and it's a very high test, requires outperformance over a quarter by at least 5%. So pretty high bar. Repligen made it.
Well, let's get right to this. And so here's the scan. Tell us about it, John.
Well, this scan searches a variety of indices, the Dow, S&P, NASDAQ 100, S&P 400, and the mid caps, and very, very contextual in the context of current market action. It's contextual because we're simply looking at a couple of waves of price action, a 10-period rate of change representing a 10-period wave that's negative. So we know there's been a lot of reactions in the marketplace lately over the past week or two. This is two trading weeks at 10 days. ROC3 says a 3-period rate of change that's up. So we get our counter wave, main wave down, shorter counter wave up. We're going to ask that volume come down because one of the important things in backing up action is that supply does not emerge. So we're simply going to take a 10-period look at the EMA 20 of volume. The EMA gives us a little more emphasis on the recent volume characteristic as opposed to an SMA. It's got to be below 0. So the slope of that line is down. Then we add the secret kicker of relative strength has to be outperforming by at least 5% over the calendar quarter. Now we're going to rank these by the 3-period rate of change. We want what has moved counter to the long trend, the short wave, the strongest first. That's the ROC3 component. We'll take a look at that in terms of how it executes on our next slide. That's our what we've got the schematics here too. So, Professor, how does that scan fit into the schematic?
Well, you know, the beauty of what you do is you scan contextually for Wyckoff. And what we are effectively doing here is we're looking for, remember we talked about swing trading. So swing trading structure in the accumulation, say here to here, and then a big run up, and then a backup. And that looks very much like what the stock market is doing right now. Had a really good rally into a peak. We had a climactic surge, point figure counts fulfilled, and now we're getting a pullback, which is shallow, has lack of volume, lack of supply, into a phase D pullback, which could either be a backup or an LPS. So there's the context of the scan that John just described. And then this is an example of a spring event. Here is a last point of support event, high or low, here to here. Both have swing trading objectives and a pullback. And so this is what we're searching for, is it not, John?
It is. So keep the schematics in mind as we look at our results. And what we want to see is a sign of strength and a gentle pullback, lower volume. So
here we have your results, or some of them, not the whole list.
Well, 76 results out of all those, approximately 1,000 candidates. We're down to 76 opportunities here. And we have some tech, healthcare, discretionary, a lot of areas that have done well of late. Discretionary has been strangely strong into recession and spending and concerns. We see discretionary being leadership as well as tech. So a couple of interesting observations there. You can learn a lot just from the character of the list when you scan, and those that can tell us what is important. Renewable energy has been on fire for quite a while. We see 2 candidates right there in the top 10. So very interesting. Should we look at a chart or two, Professor?
Let's do it. Sunrun.
Yeah, Sunrun. So very, very Wyckoff-ian picture here. The blue lines are 63-period cycle lines. So that'll give you an idea of where that quarterly outperformance comes in. And the first graph below the volume is the relative strength, and we can see that is up over that 63 periods. But look at the structure and keep in mind, recall what the schematic looked like that we were examining earlier. This would be the accumulation number 2 with the LPS. We don't really have a spring late enough in the character of the cycle to represent a spring, but we do have a very, very definite LPS back at the 2160 area. and we've moved up into a sign of strength and very, very gentle pullback through the 200 and resting on the 200 and moving back up. We see in the thumbnail window that we have 1 to 3 days up. That gives us our ROC3, and this would have moved the most over 3 periods of any stock that returned on our scan. So it's over 10% in 3 days. Very, very interesting. Your thoughts, Professor?
Well, this is such a classic example of the pullback in the schematic that we looked at. This is all causal across here, from here to here, maybe a bigger cause going back further. And we just don't know how long it could stay in here or even pull back further. But it's a wonderful structure, looks really good. And we have just a few more examples we want to show you. We know that you're very interested in how this scan is generating ideas on a Wyckoff orientation. Here is Datadog, DDOG. John, tell us about it.
Well, here we have a structure, minor sign of strength, pull back to just over the midline, supported on the 50-period moving average. Keep in mind, a couple of power chartings ago, we looked at pulling back to the 20-period moving average. Here we went back to the 50 and we're up off of that, gap up today, a little bit of supply emerging in the bar itself, but generally speaking, this is responsive to our scan. So could be an interesting opportunity here in the tech area, Datadog.
I characteristically would describe this, John, as a sign of strength up to 120.75 and a last point of support down to 100.28. And so that reaction there, which goes back to the 50, would be a classic last point of support. And so far, your 3-period rate of change is showing strength here and an attempt to rally. And if it can just start to have another rally akin to the one here in late July, this could be a very dynamic structure for us for continuation of a swing trading move. Okay.
Yeah, absolutely.
Please go ahead. Go ahead.
Well, that's also looks like it's not a lot going on there, but keep in mind that the 120 to 100 is almost an 18-20% move, and it's taken back 9 points of that in just the past 3 days. So these can be significant money makers. Even if they ultimately fail and they go to a lower high test, you've got 10, 12, 13% in there, even in the context of a bear market counter trend rally. So risk management, proper positioning, entries, all very important. Money to be made, even though we're not sure what the outcome will be. Wouldn't you say, Professor?
Yes, very much. And look at this little accumulation, very similar in size to the one we're studying here. This was a year ago, and obviously it was in the context of a bull market run. But note the extent of the move that occurred from that structure. And so a structure like this, and you point and figure people, take the counts, and it could be very illuminating. So one to do your homework on. Here is Penumbra, PEN.
Nice clean move up from the 118 area to 173. What a massive move in basically 20-25 trading days. Very modest pullback over the past 10 periods with a nice move up, gaining acceleration on lower volume. And a lot of folks don't like lower volume at the breakout areas, but that's not necessarily a bad thing, is it, Professor?
Not at all. As a matter of fact, when you complete accumulation, lower volume characteristics and lower volatility are evidence of absorption of shares, and therein creates a reduction of supply, and any increase in demand can create explosive upward moves, as we saw here on this jump up and out.
And this is a pullback right to the 20, which was one of the scans we did recently. So those types of metrics matter when you're looking at these things.
Wingstop, Interesting. Tell us about it.
Well, look at the velocity and length of the move up off fairly discrete structure in the May, June area, punched right through the 200 after the retreat to the rising 20. We're back to the 200, but looks like we're finding support there, and we've had our ROC3 periods up. So maybe people are eating wings again. What do you think here, Professor?
Well, and here's a structure that may be similar to the Datadog structure that we talked about. Beautiful swing trading structure, came very quickly up and out of the structure, did a backup, and has had literally a more than 100% move off the low. So these structures can produce big moves. And so now we've had a climax of sorts. We've had an important pullback, may have to spend more time in here, but really a great story, one to follow, and the relative strength is quite good now.
Absolutely. And those are all parts of the things that we ask for in the scan. That's always the first key to scanning is, did you receive what you requested?
This is a very
Whether or
exciting,
not you like it.
yeah, very exciting scan, John. This is so interesting. And then this is going to be our concluding chart. This is Repligen, RGEN, and you've seen the point figure work that we did prior to this. Tell us about it from the perspective of scanning.
So certainly we have our ROC10 has pulled back with declining volume. We can see the red line is our EMA of 10 on the volume side. Very dramatic decrease in recent volume there. And that's very consistent with a restrained pullback after the jump out. That's what we're looking for, is low volume pullbacks. Now we've got our ROC3 picking up into a positive territory. So we're moving up again, lower volume, but that's really kind of what we want to see. Wouldn't you say, Professor?
Well, we talked about the idea that this could be a much bigger count structure. All we counted was the area from July back to April. There's a much bigger count that goes back to January. And so the expectation of possibly having a reaccumulation occurring now, climax, automatic reaction, range bound condition, and reaccumulation would be what we would look for next to tell us that this larger count is in play for higher prices. That would be the way I would interpret it. But this is a beautiful case study. And also, this relative strength has been rising since April. This is what institutions need. This is what attracts them to this idea. This is the reason you have big, strong hands accumulating shares here, and why there was such a tremendous jump up and out, because there was tremendous absorption and very few shares in a supply available to buy, which produced a very quick advance upward. So, John, your final thoughts?
Well, keep in mind, there is a declining tops line here from the 337 down to 306, 300. And look at how this is punched through and is residing above it, maybe coming back to do a high test. But this is the area that we are at with some of the indexes, SPY in particular. So the leaders have punched through their overhanging supply, downtrend, declining tops line, and they're residing above. So that's where the strength is showing us that the rest of the market can follow. Very, very interesting early indications of a possible further move up. Never know. Tomorrow's speech could turn everything on its head, but the leaders are showing us perhaps the way. Wouldn't you say, Professor?
Absolutely. And so here we have some great examples of swing trading structures, prior great rally phases, the potential for reaccumulation for additional rallies. And so we just want to put that all in the context of the greater market and whether or not we are seeing these stocks run with the direction of the market, which we talked about 3 scenarios, 2 bullish, 1 bearish. And so with this, John, you've given us a very valuable scan to put in our collection, and it's completely contextual to the current market environment, and we are really grateful for your good work. Thank you so much for being here.
Happy to be here as always.
All right, everyone, we'll see you next time. Check out tsaasf.org, and also Wyckoff Analytics is starting their new education cycle for Wyckoff courses, and they have the first session is free. It's coming up this coming week. So with that, we'll say so long for now and see you next time.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.